Well, welcome to Investor in the Family Radio. My name is Brian Bain, your host, and I've got a special guest with us today, Andres Cardenal. Andres, thanks for joining the show.
Hi, Brian. Thanks for having me.
Absolutely. Andres is a special contributor to Seeking Alpha from Argentina, so thanks for joining us from Argentina today.
My pleasure.
And about a week ago, Andres wrote an article entitled, "Is it too late to buy Nvidia stock?" And it's funny. This is a situation where I feel like an author picked the perfect title for an article, at least for me, because I've actually been wondering that same question myself for quite some time. I follow a number of analysts that I have a lot of respect for that have been very bullish on Nvidia for quite a while. But again, being bullish on Nvidia 2 years ago versus being bullish on Nvidia now is a very different story, considering how significantly the price has appreciated. So when I saw your article, "Is it too late to buy Nvidia stock?" I jumped right on it, and I was eager to read it and eager to have you on the show as well. So for people who have not yet read that article, do you mind giving us a brief background on your thesis?
Oh, yeah. Main thing is, NVIDIA is reported spectacular financial performance. The company is growing like crazy, and the stock has skyrocketed over the years. So it's kind of, a growth story that always looks expensive, and then it keeps delivering above expectations. When I think about the business and I think about valuation, main question is, what kind of expectations are embedded into the valuation? Is the stock too expensive or is it undervalued? And in NVIDIA's case, you see really high valuation ratios. So you always think, oh, okay, expectations are very high for this business. Chances are that it's not going to deliver. But then it beats those high expectations. So it's kind of really an amazing story.
Well, can you talk about, so what do you feel like the expectations that are currently built into the price are accurate? Are they understated, maybe overstated?
Well, that's always risky to say because, the company operates in a very dynamic and always changing industry. But I think, this brings us to a broader topic, which is, growth and value investing. And I remember a quote, I think it's from Charlie Munger, who says, there's really no difference, because when you think about this, you think about value investing and you say, how much is the business worth? And growth is a big part of that equation. How much is the business worth? So in NVIDIA's case, I think, the semiconductor industry is very cyclical, and a lot of analysts have been thinking, oh, okay, the company is reporting spectacular numbers, but we're near the peak in the cycle, so it's going to come down, and that's going to crash the valuation numbers. I don't like to say that this time it's different, but the world is changing. We have a lot of demand for the company's products in areas such as gaming, cryptocurrencies, artificial intelligence, virtual reality, all those drivers over the long term. I think there's a good chance, you never know for sure, but I think it's a good chance that the company is going to keep delivering above expectations over the long term, In the short term, on a quarter-to-quarter basis, that's really hard to say. So I think investors in NVIDIA are going to face a lot of volatility in the short term, but probably a good chance of attractive returns over the long term.
So just by nature of, we'll just call it gravity, the fact that it's gone up so far so fast, it's reasonable to expect some pullback in the short term, but that's more of a factor of the significant price increase than it is anything negative about NVIDIA.
Absolutely. And of course, at this valuation level, the stock price doesn't provide any kind of buffer for bad news. And most companies, sooner or later, they're going to have a bad quarter. That's unavoidable. That's the way business works. Or at least some bad news, growing competition from another player, or even market risk. Sometimes, there's a crisis in Europe and investors start selling risky stocks. And NVIDIA's are risky stocks. So you need to face the reality that the stock is going to be very volatile. That's unavoidable, I think.
Very good. Yeah, so that is a good point. I mean, with increased volatility in the market, even if it has nothing to do with NVIDIA, it's natural people are going to sell NVIDIA just because if you've owned it for any period of time, you've got a lot of gains you can capture, and it's just a high beta stock. It probably will vary significantly with general market volatility, which we've seen a lot of this year.
Absolutely.
Let's go back to the article a little bit. You talk about the remarkable financial performance that's led them to where they are here. Could you tell us more about that? Because again, some people, including myself, I'm familiar that Nvidia has had an incredible run over the last few years. And I know that, Micron has done very well recently, as have other semiconductor related companies. And again, a big part of that has been the big cyclical nature of semiconductors. What can you talk more about Nvidia specifically, like what they've done well to help them capitalize on this most recent cycle?
Sure. I think the most important thing is the company pioneered the GPU, which is the graphic processing unit. It's a processor that works very well on personal computers for games, game consoles, and even smartphones. And they also are betting on different areas such as self-driving cars, computers inside cars, artificial intelligence, deep learning. So it's basically being in the right industries where there is a lot of growth opportunities, and then putting a lot of capital on research and delivering market-leading technologies. So if you look at revenue, in 2014, the company was making like 4.13 billion in annual revenue. Now it's going to make 12 billion. So, revenue growth has been impressive, and both earnings and free cash flow are growing at an even faster rate because the business has a lot of operating leverage. Generally, sales grow at a faster rate than expenses, so profit margins tend to expand.
Yeah, well, when earnings and free cash flow grow significantly beyond expenses, that's definitely a really good thing. And I recently did an interview with someone on Micron, which obviously has seen really significant appreciation of late as well. And it's kind of a similar story. I mean, in the last year or two, their free cash flow has just exploded to a level of them being able to take care of debt and do a lot of other really positive things for the company in a really short period of time.
Yeah, I think Micron is different in the sense that Micron has really low valuation ratios. The company is centered on the very cyclical memory industry, and investors are paying like a price to earn around 5 or 6, and the company is growing like crazy, and everybody's always saying, "Oh, okay, this is the top of the cycle. This is the top of the cycle." And the company just keeps delivering.
Yeah.
In Nvidia's case, the company keeps delivering above expectations, but expectations are remarkably high. So I think it's a similar story in the sense that investors have understated their ability to sustain performance, but Micron is still cheap, which is quite impressive.
So yeah, you say so. At this point, there's similar stories, but for some reason, Micron continues to be valued at a very low PE versus Nvidia, that's very much not the case.
Oh yeah, I know. The main explanation for that is that Micron is more centered about memory, so it's like more like a niche play, and Nvidia is betting on multiple markets with a lot of growth potential. So that justifies the different valuations. But I think that's the main thesis that is, investors are too concerned about cyclicality and they are not seeing the big picture. I think the main thesis is the same.
But it sounds like in general you think while you strongly believe in the future potential of Nvidia, you do have more concerns that the price may have gotten a little bit ahead of things, the company at this point. Is that fair to say?
Oh yeah, I think valuation is a key risk factor for a position in Nvidia.
Right. Let me see. And so then let me go back to the article a little bit as well. And can you tell me a little bit more about a little more background on Nvidia also, because it's, again, I won't say it's a new company, but I feel like, and this is again my outside perception because I haven't followed the company very closely myself, but my perception has been that a few years ago, obviously that was before Nvidia had the huge run up that it's just had, but it was much more of an outlier stock, I want to call it. Like it was kind of like more of an unknown, but they really caught on. And I know Mark Hibben and others have done a great job of following this in terms of really capturing on like a really significant shift that has taken place in the processor sector, like shift from kind of more traditional Intel approach to developing processors to, and Nvidia has just been perfectly placed to capture that new trend. And I know I'm probably not explaining that as thoroughly as an insider would, but does that fit some of your understanding and views as well?
Yeah, absolutely. For a long time, many investors have been concerned about Nvidia's ability to continue competing successfully versus the Intels of the world. And the company has proved, that it can keep delivering successful innovation, generating a lot of cash, and investing that cash in more R&D. So it's kind of building a source of competitive advantage by having a lot of information from the products it develops and putting a lot of cash to work in R&D, which is not usually the case in the tech industry. Many times, the small player has a leading technology, it works wonders, it makes a lot of money, and then the bigger players build something similar, and then the big fish eats the small fish. But in this case, Nvidia started like the small player, and it kept growing and growing and growing, and now it's the absolute leader in its main markets.
So I guess maybe what's made Nvidia different is I guess they've had a good strategy of reinvesting early and making good use of that reinvestment in R&D, and maybe they've been so successful they've been able to have enough to invest already in directions they need to. But I guess another component is they were smart enough to see the shifting in trends, whereas again, maybe more traditional company like Intel didn't see that shift early enough or was not able to capitalize on that early enough.
Oh yeah, that's the case. In fact, it happens many times that the big company, they are too concerned about protecting the key markets and they don't see the new growth areas. While like a younger company such as Nvidia, they were the pioneers in video games and all the new technologies. So, they were just fighting the right battle.
Right.
While Intel was trying to protect their share of a shrinking pie.
Right. And so who would you say is Nvidia's primary competitor right now?
Oh, I think they have like lots of competitors because you never know where the industries are going to evolve, how they're going to keep playing. I think probably I would say Intel, basically because Intel has lots of money, and at the end of the day, money doesn't buy innovation. You need the right management team, you need the right mindset, but it can make a difference because with a lot of money you can buy smaller companies, you can even bring in talent. I think Intel and AMD, Advanced Micro Devices, those are probably the key competitors for Nvidia.
Who is the second one you said? Intel, and who is the other one?
Advanced Macro Devices.
Oh yeah, AMD. Okay, AMD. Right. Okay, yeah, that makes sense. And obviously at this point, and my impression is that AMD has done a better job of adapting to shifts in the industry than Intel has. Is that accurate?
Yeah, I think Intel is now working better but AMD they did it sooner.
Right.
They kind of saw the mobile revolution and they made a lot of money from that. So I think Intel is now catching up. And I like what the company is doing, but AMD, they moved first. So That's always important.
Right. Can you talk to us a little bit more? In your article, you mentioned toward the end in a section called Putting It All Together, you talked about the power factor system. It's a quantitative investing system and used in your research service. Could you tell us a little bit about that and what that system, how you're using that to get feedback on Nvidia and its investment potential?
Yeah, that's, it's interesting because many times I try to think about, is this stock still a good investment at current valuations level? So what I do with the power factor systems is I put together mostly 4 factors. Those are financial quality. It means revenue growth, profit margins, earning growth, financial strength, all those kinds of indicators that tell you, is this a good business or not? Then I include valuation levels, multiple ratios, such as price to earnings, enterprise value to EBITDA, price to sell, and the such. Then I include financial momentum, which means is the company doing better than expected or not. This is key because in the stock market, it's not just about the fundamentals, but the fundamentals in comparisons to market expectations. So if the company is doing great, but it's underperforming expectations, the stock is going to go down. And if the company is doing, average, but it's doing much better than expected, chances are that this is moving to move the price higher. And the fourth factor is relative strength. You want to buy companies that are not only doing well, but that are also doing better than others because, there's an opportunity cost for your capital.
Excellent.
The money that you put to a company, to a stock that is not moving, is not available to be invested in a company with superior potentials.
Yeah, that's a good point. Any regular listeners to the podcast know that I always get really excited when people have clear systems that guide their investing. So I'm glad to hear you've got a clear system in place because I think that makes such a great difference in helping with decision making. So in light of the power factor system that you've been using, looking at financial quality, valuation levels, financial momentum, and then relative strength, how does Nvidia measure up?
Well, the stock is in the best 50 stocks among the 500 names in the Standard & Poor's 500. So it's in the best 10%. So when you include all the variables together, meaning quality, value, momentum, and relative strength, the stock looks really attractive. And that's what really gives me confidence because, you say, okay, the main weak point is valuation. The stock is expensive. That's right. But you have to think about valuation in context. So the stock is expensive, yes, but it has outstanding financial quality and spectacular momentum, and it's crushing expectations. So when you consider all that together, I think that chances are that Nvidia will continue crushing the market.
Excellent. I'm sorry, I'm taking a moment to take some notes. It's just said the main negative is valuation, but people must remember the context. It's a great quality company that's smashing expectations and just continuing to over deliver. And so in light of that, it's reasonable to expect it's going to be overvalued. I mean, like a company performing that well is not going to be undervalued for very long, if at all.
Yeah, that's right. You can't, expect to have it all. Superior companies don't trade for below average valuations.
Well, maybe I guess it could be a situation where, I think about, it's been a number of years now, I guess, was it 2012, 2013? I forgot what it was when Apple had, I guess a couple times in the last 10 years, they've had several really significant price surges that were then followed by, a pretty significant sell-off. They had that big sell-off several years ago.
Oh, yeah.
And everyone, that's when before their stock split, and it got up to 600 something, and then it sold off to the 300 or something, and everyone was talking about negative about Apple. But the company, and there are question marks obviously with the change in leadership and otherwise, but it was an incredible investment at those low valuations. So even, yes, I guess important to remember the power of sentiment. And sentiment was strong, and then it got weak for the same company. And I guess it's reasonable to expect that could happen with Nvidia, or it could keep surging. So I guess definitely a company to keep an eye on if there are any near-term pullbacks, but potentially worth looking at even without that.
Yeah, going back to Apple, I think the stock has been like a tremendous buying opportunities on multiple pullbacks. And I think that's another story in which many investors have been too concerned about the company's ability to sustain growth. Because, Apple reported a couple of quarters with declining revenue, and everybody was, not everybody, but a lot of analysts were saying, oh, okay, this company is dead, it's already too old, it's not innovating enough. And when you look at the business in perspective, it has over 1 billion installed devices. And customers are tremendously loyal to the Apple brand. So chances are that most of those customers will buy an Apple device when they renew their smartphones. So that's providing a huge, stable market for renewals. And on top of that, Apple is building a huge services business.
Right.
So, I think Apple is another company that's really worth looking. But valuation, I think, is still very, very reasonable, if not even undervalued. And it's going to return a lot of cash to investors through buybacks. So, it was a huge bargain when the stock was trading, I don't know, like 50% below current prices, but I think it's still a good price.
Yeah, absolutely. Absolutely. Yeah. And again, it could, I mean, unfortunately, we don't know the future, but that could be potentially a model for a company like Nvidia. You know, if there is some near-term pullback, it could be a great opportunity for investors to look into, just like Apple was several years ago, as well. So, well, hey, Andres, thanks so much for coming on the show. Do you have any final comments on Nvidia you wanted to share that maybe I haven't failed to ask so far?
No, that's great. I think another possibility for investor is playing Nvidia through the options market in case you trade options, you know, because one thing I like to do when I think that this is a great business, but the stock is probably too expensive, you can sell put options. So if the stock at prices below the current stock market price, so if the stock keeps rising, you just get to keep the premium. If the stock falls to your option price, then you need to buy the stock, but you're buying it on a pullback. So that's a good choice for those who say, okay, I want to buy the stock, but not at current prices.
Excellent. I like that. Yeah, I agree. I think it can be a very disciplined approach. Instead of having to jump in right now and buy maybe at prices making you uncomfortable, you know, sell put options, make some money in the premium, and then if as long as you have cash, if there's cash secured puts, then if the stock price drops and they get put to you, well, then you get to buy Nvidia at the price you wanted, and collect the premium, which is a win-win.
Absolutely.
Awesome. Wait, Andres, hey, thanks so much for giving us your time today.
My pleasure.
Cool. Have a great rest of the week.
You too.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.